Today in the grain market, soybeans were lower. Trade seems to be consolidative at best, and futures do remain inside that 50-cent channel between 16.50 and $17. Now, that's inside the larger channel that it had been in from last week, from 17.59 to 15.79. So we're still kind of in that area, trying to figure out which way the market really wants to break out. There is some support underpinning the market, and today's range is really a modest 30 cents kind of to end of the week. The option open interest, though, has November as one of the most active options. November $15 calls have 13,750 contracts, and the July $10 puts has 10,600 contracts. Those are a couple of strikes to take a look at that could be impacting the market down the road, just something to be watching. The CVAL today is at 28.9%, with the soybean oil at 41.6 and the meal at 33.6 as well. That's very, very strong. So it just seems like the complex as a whole has plenty of support underneath, even though the market isn't surging the way some of the other grains are. Today, corn was pretty steady. Demand is shifting back to the U.S., and futures still remain within their latest channel between $7.30 and $7.65. Export sales are at their highest level since September 1. I think that just shows you that the international demand is really kind of underpinning the market. Today's trade has a modest 20-cent range, but don't be fooled because the CVAL is still very, very high at 45.5%. So there is plenty of activity there. Wheat it did firm up today, so the futures selling did finally slow down, and we got we got the market to pick up a little bit, but it did trade on both sides of unchanged after being down for 4 days in a row from 1363 down to 1043, and it filled all but just one small gap that was set back on March 1st from 984 to 985. I don't know if that one is, technically speaking, if the market really wants to go down that far to go ahead and fill that gap. But wheat export sales were up, perhaps having some impact on the market in the market's recovery really right now, but notwithstanding the trouble in Ukraine, that's really overshadowing the market as a whole. Now, the May $9 strike is down 1,500 contracts today, and I think that the $12 and the $13 are both up. So I think that's something to kind of be watching with the 4,000 contracts on one up to 2,400 on the $13 contracts. It's very important right now to maybe kind of see where some of that option open interest is starting to build. That being said, the CVAL is down 2.5% to 79.6%, which is just wildly high. I mean, the difference, what does it look like when you see a market at 79% volatility versus 100% volatility? Really, really high right now. But of course, the stakes are high with what's happening in Ukraine. The market just seems to be suffering a little bit of panic fatigue, and yet we are far from being out of the woods. Weather is getting ready to turn the corner into spring, so that's something that we're going to be watching as well. And don't forget that daylight savings time is also this Sunday, so things are changing pretty rapidly. But to end the week, the market did firm up somewhat.